This tutorial deals with restricted stock tax liability. This is Jim Sample's RSA Tax Liability Dashboard. It lists Jim's total number of shares vesting each year and calculates the estimated tax liability generated by these events at different stock prices. Additionally, it calculates the number of shares that will have to be sold to cover the tax and the remaining net shares. As with most dashboards, this one allows you to change various assumptions to compare current and revised values. Let's begin by going over some of the concepts on which this dashboard is based. Unlike options which are taxable when the participant chooses to exercise, RSAs generate a taxable event when their restrictions lapse, that is, vest, and the participant takes ownership of the shares. Companies must withhold taxes when RSAs vest, and consequently, the participant may have to sell shares to cover the tax liability. The RSA Tax Liability Dashboard facilitates planning for these taxable events. The formula used in stockopter.com to calculate the tax liability is as follows. RSA shares times the stock price equals the RSA value, and we apply the tax rate given for this individual to that value for the tax liability. Tax liabilities are calculated for the current stock price and prices at two increments, for example 20% above and below the current price. And as mentioned before, the dashboard also calculates the shares required to be sold to cover the tax liability, should the option holder desire to do so. Tax liability divided by the stock price equals the shares required, and the shares vesting minus those shares required equals the remaining net shares for the option holder. Let's look at Jim's RSA Tax Liability Dashboard to understand the calculations. In 2010, Jim has 5,000 shares vesting, which will generate a tax liability. The stock price at that time is unknown, so the dashboard shows a range of possibilities, starting with the current price of $35.03, and then increasing and decreasing in 20% price increments as defined on the company input page. In Jim's case, the first 20% stock price increase results in a stock price of $42.04, a tax liability of $73,563 for the 5,000 shares, using a 35% combined federal and state tax rate. Conversely, the first 20% decrease results in a stock price of $28.02 and a tax liability of $49,042. You will note that the shares required to be sold to cover the various tax liabilities is the same across all stock prices. This is because dividing the tax liability by its associated stock price always results in the same number of shares. Additionally, we are assuming that the participants' combined tax rate remains the same regardless of the stock price changes. Now let's change the stock price to $40 and the price increment to 10% to show a narrower range of possibilities. Then let's assume Jim's tax rate is 40% when his RSAs vest. With these revisions, when they're applied, we see a new set of RSA tax liabilities, shares required, and net shares. Modeling different scenarios will provide participants with insights on their impending RSA tax liabilities. This concludes this tutorial.